They don't want to go through all the issues with refinancing the first mortgage because they have a very nice payment and their first lien rate was 3.25. So all we did was have them do a second lien.
One of the borrowers from the first lien must be on the second lien transaction. You have a broad variety of products available for the second mortgages as well. We don't even have, per our guidelines, any minimum requirement, because I know that a lot of lenders do cap you.
Hello, everyone. It's A&D Mortgage with doubling down second mortgages as a tool for financial flexibility. Welcome, everyone. So we have our chat open, so feel free to welcome each other. Let us know where you're connecting from today. And let's proceed to our today's agenda. Today we'll discuss a couple words about our company, A&D Mortgage, if you are not yet familiar with us. And then we're going to dive deep into second mortgages. We'll discuss the requirements to be qualified. We'll touch a little bit the ineligible first lien. And then we're going to discuss a variety of second mortgage programs together with real life loan scenarios. And we'll have a chance to do the Q&A session at the end. So please feel free to use the Q&A box and drop your questions. Before we proceed, a couple of housekeeping rules. As I mentioned, the Q&A box is ready for your questions, so please drop it there. I need to mention that everyone will receive the copy of today's presentation together with the webinar recording in 48 hours. And your video and sound is muted, but you can definitely communicate with us and our today's experts through the chat and Q&A box. Okay, so we are A&D Mortgage, and we've been in mortgage industry 20 years now. It's our anniversary year, and we are very proud to provide you with a variety of loan programs and top-notch service. We've been verified as #1 non-QM lender, and we are very proud of this. We have more than, well, I would say more than 6,500 partnering brokerage companies already. We have more than 20 different loan programs for our partner brokers. We've received 4.7 on Google, Zillow, and Trustpilot. We're operating nationwide, and we almost nationwide. So we aim to cover all the map shortly. Recently, we also launched our Advantage loyalty program, and we are very proud of this. So if you didn't yet have a chance to start using it, we really encourage you to do so. And on the right side of the screen, you can see just a small part of the awards we've received last year. And so altogether, we've received 18 awards, but we just don't have enough space on the slide to cover everything. Also, we're partnering with our sister company, Imperial Fund, which was found in 2014. And partnership with this company allows us to securitize our loans. And just a few lenders in this industry are able to do so. And as we mentioned, here's our footprint. We are licensed in almost every state, and we'll cover all the map. I'm confident we'll do it shortly. And on this map, you can see some states has this little like asterisk, which means in those states you're not required to have a license to do business purpose loans. Okay, with that being said, I want to introduce to you our today's experts. Nadezhda Smokvin, she is our business development team lead, and Carlos Diaz, underwriting team lead, and they will introduce you to our second mortgage program. So Nadezhda, the floor is yours.
Good morning, good afternoon, good evening, depending where you're located. It's very nice to see you again. I haven't been here for quite some time, but I've been working with a lot of our partners throughout the year, so I'm pretty sure we have connected at some point with everyone who's attending this webinar. So today we will discuss the second mortgages by A&D Mortgage, and this is one of the greatest products nowadays, since you basically can tap in the equity of the property without refinancing the entire loan, which nowadays is a great feature because almost all your clients have a first mortgage from the good times when the interest rates were low and they don't want to refinance, but their equity now is in a good state and they want to get the money out. It's way better terms rather than doing even a HELOC if we're comparing with that feature, because our second mortgage is a HE loan, which is a 30-year fixed with the set monthly payment that's like your borrower is knowing and understanding what's going to be the monthly obligation of this mortgage, and they're getting the big lump of amount of money that they can spend on whatever they need, on renovations, on consolidating their debt. So it's a great opportunity for your borrowers to get their financial situation in a better state without touching the first mortgage that usually gets them in a better combined rate rather than just refinancing to current rates the full entire mortgage. So who can qualify for the second mortgage? It's basically almost every type of borrower that we're qualifying on non-QM level, excluding 18 borrower. So that is going to be the only borrower that might be able to accept with exception. However, like that's going to be the case that we will have to look through it on a case-by-case basis. The rest, it can be a citizen, permanent resident, non-permanent resident. And if you guys have done non-permanent residence with us, you can know that we have like a huge list of non-permanent visas available. Not every lender has that available. For national borrowers, when we are speaking about the home ownership, it could be experienced homeowner who has any type of residency within the country, or it can be even a first-time home buyer, including even in DSCR loans. So like even on the most complicated loans, which normally do require some home ownership experience, we are having feature for the first-time home buyer as well. The vesting can be anything. So the same as on the first lien, second allows individual vesting in all sorts of kind. The LLC corporation, even trust is allowed in those. The main thing that you have to keep in mind when we're speaking about the qualification of the borrower is that the borrower on the second lien, at least one of them has to be from the first lien. So one of the borrowers from the first lien must be on the second lien transaction. If you have a husband and wife on the first lien, at least one of them has to be on the second lien. If the first lien was on the husband only, you will not be able to do the second lien on the wife only. So I hope that makes sense and explains the situation here, okay? The main parameters of the second mortgages. So foreign nationals are the only borrowers who are allowed with a no FICO option for the second mortgage. The rest have to have a FICO, and minimum FICO score for the rest will be 680. We are offering second mortgages for every type of program. So it can be full doc, your tax returns, W-2s, it can be bank statement and P&L for self-employed, WVOE 1099 for employed people, asset utilization, and DSCR. So everything that you know about non-QM, everything is applicable here as well, which is a great feature. Again, not every lender has that to offer. A lot of times when we're speaking about second lien, people think about the HELOC with the full doc documentation. That's no longer the case. You have a broad variety of products available for the second mortgages as well. Any type of occupancy can be allowed for the second mortgages. Only foreign nationals will be an exclusion there because foreign nationals are eligible only for investment product, but the rest, our residents, permanent and non-permanent, are available. The product is available for any type of residency. Loan amounts are varying between 550,000 K and 500K. So that's going to be your range of the loan amount. Combined loan amount will be up to 4 million. So we will always consider the first mortgage transaction as well. So the combination of the first and the second cannot be higher than 4 million. Our second mortgage can be both in a standalone position and the piggyback. And it doesn't matter if the piggyback is both with A&D or one is with A&D and another one is with someone else. That is fine. We're more than welcome to consider those loans as well. We in this presentation we will cover like what documents will be needed if the first lien, a piggyback first lien, is originated elsewhere. It's going to be like a little more documentation because we have to have the numbers from that lien, but it's all doable. The great thing is that for every product, not for the second lien only, for every non-QM product, we are requiring only 30-day seasoning for the assets, which is, again, a great feature. Nowadays, not every lender offers that, and 30 days, it's more than doable to season money. So keep advantage of that. And like normally, one bank statement is more than sufficient to qualify for the asset purposes. If your borrower has 3 FICO scores, that again applies to all our non-QM, our trade line requirement is waived. So a lot of times people are concerned about qualifying for non-QM when the trade lines are not available. If all repositories are reporting the credit score, you are good to go. We don't look at the trade lines at all. You don't need any alternative trade lines. We can go just as is. Since the loan amounts are quite low, the reserves requirements will always be limited to 3 months. The credit event is 48 months. Great thing is the appraisal part, and I know that we are working on features to even make it better. I will not be a spoiler here until we will actually put it on paper. Currently, though, we have the ability to use the old appraisal as long as it's not older than 360 days. So if you have a case where the borrower has an appraisal, as long as the AVM pooled within our company is supporting the value by 90% at least, we will be able to use that appraisal. If the appraisal is older than 360 days, we will need to pull the appraisal with us at the moment. Again, there are more things to come on that topic, so stay tuned, watch all the AEs, stay tuned on the updates on these guidelines. Second mortgages do not require escrows at all. So we will use the numbers from the first lien transaction. For this one, we don't need that. And the great thing for you guys, for our partners, is that the full compensation is allowed with us on the second mortgages. I know that a lot of times you guys are not able to charge the full comp on those. So unless the state has some restrictions on that, because there are several states, I believe New Jersey is one of those that do not allow to charge any compensation for second mortgages. There are like 2 states, I believe, with that standard. So unless that is the case, we do not limit. You can charge up to 3% borrower paid and 2.75 on lender paid, the same as you are doing it on any other non-QM transactions. Okay, so piggyback loan is covered here on the separate screen because it's important to understand what documentation is needed if the piggyback is happening first lien elsewhere, second mortgage with A&D. I mean, it's pretty straightforward here. You need the recent disclosure and load an LE from the first mortgage, wherever you're doing, with whatever lender you're doing it. You need the approval letter, you need the first note and the final closing disclosure. That's kind of it. So a lot of times this feature is used to avoid the full condo review. This is just like a little tip for you guys. So if you have a situation when the full condo review is an issue for the file and you want to check out the option to combine it with the second mortgage, this is one of the things that you can consider. Okay, so property types, you know that A&D has a very large variety on non-QM when it comes to property types. Second lien is more like classy. It's going to be like just 4 property types that are allowed. It's single family, pod, 2 to 4 units, and condominium. So all of those condo tiles, manufactured homes, everything that we normally do on non-QM, it's not going to be eligible here. I mean, again, we're quite flexible on exceptions. If you have a great case with a lot of compensating factors, probably does make sense to give it a shot and file for an exception and see where it's going to go. But this is our guidelines. So 4 property types. And it's also important to know what is ineligible in those property types. It can not allow the deal go through. This is normally something that applies to every file non-QM. So every like the appraisal condition, construction rating, if your square footage is lower than 500 square feet, if you have timeshare or the acreage is too large, like larger than 10 acres, those are the cases that will make your file ineligible. And again, this is like something that is applicable on every non-QM level. So it's something good to know, basically. When it comes to the acreage and the gross living area, definitely worth to file an exception as long as it's something close enough to requirements. Because a lot of times you might have like some studio that is 450 square feet. Definitely reach out to your account executive and see if that's something that can go through via exception. I always say that it's great to know what is eligible. And a lot of times on second lien transactions, people pay attention to numbers like to LTV, to FICO score, like all the matrices. But it's also very important for this type of product to know what is the first lien, because a lot of first liens will make your second lien transactions ineligible. So in that case, you will have to go through the refinance transaction to obtain the goal. So the ineligible first liens are listed here. These are like full list of them. I will cover a few that are popular. So one of those will be the private mortgage that has been obtained less than 12 months ago. So in that case, if that's the basically young private mortgage, we will not be able to take the second lien on it. Again, if it's close enough to 12 months, let's try to see a case-by-case review. But normally, we want to have a seasoned mortgage when it's a private mortgage. Anything unrecorded. So if you have a seller financing on the loan on the first lien transaction and it's not recorded as the mortgage, we will not be able to do the second lien on top of it. Anything that is assumable loan. Nowadays, we see a lot of DSCR loans, like investment properties that the investors are assuming loans. That's not going to be the case that we will be able to put the second transaction. And also in this assumable loan will be included all the governmental loans. So if you have a FHA, VA, USDA loan in the first position, we will not be able to do the second lien on top of them. Anything with the balloon payment, balloon feature. Same here. And there is also one thing that I would like to cover on the ineligible side. It's the modification. So that's something that a lot of times when we get the scenario for the second mortgage, we have the the mortgage statement that has a deferred balance. So don't get scared of having deferred balance on the bank statement as long as it's not an active modification. So this is something to understand, like that we are not against of deferred balance as long as it's not with the balloon feature on it. We're against of the active modification process. So if they had modification in 2010 and they had some deferred balance now on the statement, you should be absolutely fine to proceed with the second mortgage transaction. Okay, and now we will go through actual products that we are offering on second mortgage. So we will go from the like the cheapest one and with the eligibility, like the higher eligibility, to the options of alternative documentation. So we always start with the full doc. It's your tax returns, it's your W-2 borrowers. We have always two options. It's 1 and 2 year full doc. It's always safe to go with a 1 year full doc if you have anything declining. So if you have a declining income, please don't go with a 2 year full doc option, go with a 1 year full doc option. Pretty much works the same as Fannie Mae files, just like on the matrix, you can see that the transaction allowance is way higher. So normally, like even on the first lien and the second lien, you have the ability to first of all do the second lien. Second, like your matrix numbers, the loan amounts are higher, and so far so on. But the approach on the documentation and how we look at the income will be pretty much the same as Fannie Mae. If you want to include the rental income in this transaction, is the same kind of approach as Fannie Mae as well. So if it's a purchase, we will be able to pull the 1007 or use the lease agreement if available. It has a breakdown in the lease agreement, like the transfer from borrower to seller. The lease agreement is acceptable only in the seller's name with a 2 months payment. So again, when you will have the scenarios like that, reach out to our AEs to make sure that we're on the same page and structuring it correctly. And for refinance transaction, it's going to be the Schedule E, the same as the Fannie Mae requires. And if the rental income is not reported, that go through the exception that Fannie Mae allows as well. So basically, full doc is going to be very like going back to the selling guide. The next product will be the bank statement product. Okay, so the bank statement product is going to be the alternative that we will start with. It's the available for self-employed people. So you will not be able to do the bank statement for any payroll person. It has to be the self-employed. However, it doesn't mean that your borrower has to have an actual C or corporation in their name. It can be also the Schedule C borrower who will provide us the CPA letter confirming that they are acting as Schedule C, confirming that they have reviewed 2 years of their, or whatever amount of years of their financials, confirming that they're acting as self-employed and so far so on. So that is also the option there. Because I know that a lot of people are getting a little frustrated with like actual ownership. It's not always the case. Okay, we're offering 12 and 24 months bank statement programs. So you have again 1 and 2 year options. It can be personal and business bank statements. Usually when it's a personal bank statement, we are not having any expense ratio. We're just using all 100% of deposits on those statements, unless they're used as business. When it's a business bank statement, it's gonna be expensed. So by default, it goes with a 50% expense ratio. So we are taking half of your deposits, and that's the income. However, we also accept the CPA letter. So if your borrower and that company particularly makes more money, less expenses, and industry standards are kind of aligning with those numbers, we're more than fine to use the CPA letter number. And we don't even have per our guidelines any minimum requirement, because I know that a lot of lenders do cap you. So like not less than 10%, not less than 15% expense ratio. In our case, we don't have that minimum cap. However, it does have to make sense. It does have to meet the industry standards. Like it just does have to make sense. You can combine bank statements. You can combine personal and business. You can use 2 businesses, like 2 bank statements for businesses. For personal, you don't have any limitations on how many bank statements you can use. But you also can commingle, and you can commingle even something like bank statement with some other income, with asset utilization, with W-2 from another company that maybe they are employed somewhere else, and you can use the combination. Maybe one borrower is W-2, another borrower is bank statement. So all those things are possible. When it comes to the bank statements, we need to be cautious with the non-sufficient fund transactions. So those, in my practice, are like the most frequent killer of the file, because a lot of people, they're looking at the transaction themselves but don't pay attention to the NSFs, and that's a very important part because it shows us the responsibility of the borrower to repay whatever obligations they have. So the requirement is not more than 3 non-sufficient fund transactions in the last 12 months period. So pay attention to 12 months, because if you have 24 months bank statements, we don't look at the 24 months of the NSFs. We just need the recent 12 months to be nice and clean and no NSFs. So 1 NSF is basically 1 business day. So don't just look at every NSF transaction. We basically look at the per day, that there is no more 3 days of NSFs being present. Okay, the CPA letter. This is very important. A lot of people, a lot of brokers, partners are asking us about who can prepare the CPA letter. So it's not only the CPA, even though it's called CPA letter, it can be also prepared by the tax preparer, by the IRS enrolled tax agent. So you have options. Not everyone has the CPA person working with their financials, so feel free to use other options available. Same as full doc, bank statement is allowing up to 85% LTV. So this is going to be like the max allowance for the second mortgage transactions, and up to 75% on second home and investment transactions. We can move next to profit and loss. So profit and loss is going to be the great product if something is not looking great with the bank statement. So bank statement will be probably the best option for the self-employed person. But if you know that that is not an option to qualify for the loan, please make the qualification process beforehand with an account executive and see what is going to be the most suitable product. The P&L is one of the solutions that can help to qualify a self-employed person. Same here, we have the option for 1 and 2 year P&L. We are accepting, by the way, for the bank statement as well, the self-employment being less than 2 years, as long as you have the history of the company existence, of being self-employed within the company used for qualification for the last at least 12 months. And you had the previous experience in the same field covering like the full 2 years, basically. So in that case, as long as it's the same field, as long as your company exists for at least 12 months, we will be able to use it for qualification purposes without going through any exceptions. The loan amount on the P&L is way lower than on our bank statements and our full doc. P&L is always way riskier program, so it's going up to 2.5 million. Same here, P&L can be provided by tax enrolled agent, the IRS enrolled agent, or tax preparer. The way P&L works, if you have an LTV lower than 70%, then we are going on a standalone P&L. So you are providing us the P&L statement provided by the applicable financial worker, and we're good to go. If you have a CLTV of higher than 70, so between 70 and 75%, 70 and 80%, sorry, then in that case, we will need a 2 months bank statement to support the P&L. So the requirement is the 75% of the gross income reflected on P&L has to be supported by 2 months bank statements. One thing here, based on my experience, that I want to add. If you know that your bank statements do not support it, don't submit file with 80% LTV and hope that if something, you will drop it to 70% LTV. Not exactly how it works. Like, we have to provide a nice and as clean as possible file from the start. And it's very hard to downgrade the file in the process. So it's easy to upgrade and go instead of P&L with a bank statement, but it's going to be harder to downgrade it. So if something is off, please discuss this with the account executive and submit the file nicely. So if like the bank statements are not available to support it, are not available to provide for the file, just submit it right away with the 70% or less to go with the file within guidelines. If you have a case with a separate companies, if you have a borrower who works for several separate companies, we're able to accept several P&Ls as long as they're separate. Like, each company has to have a separate P&L for them. The LTV is up to 80% and 75% for investment and second homes. If you have any questions regarding the products while we are on the screen, please feel free to use the chat feature, and me and Carlos will cover the questions. Okay, one other product that we have is the asset utilization. I would say that it's not the most popular product, but it's great to have in the portfolio just to have the ability to use it when it's needed. A lot of times it's great product with in combination with something else, because there are cases when the borrower, like, let's say you have a W-2 borrower and there's not enough income to qualify with the DTI ratio, and they don't want or don't have any additional borrowers to add to the file. So this is something that they might have assets, they might have money in the bank account, they might have retirement funds that they can use and supplement their income and qualify with an asset utilization product as well. So the way it works, we have the qualification for the assets. So if you have bank account, the saving, checking, any investment account, stocks, bonds. In that case, we will use all the money that you have in the bank account. If you have retirement funds like 401k, we will do the 30% haircut, so 70% of funds will be used, and we will divide that number, that amount of the qualified asset, into 60. And that number will go in your application in the 1003 as your qualified income. So that's basically how it works. And the requirement for this will be that you have, after you paid down payment, closing costs, reserves were taken in consideration, in your bank account, the leftover has to be one of the lower of 1.1 of times of the loan amount, or 1 million. So if you have a loan amount of 100,000, then we need to have 110,000 left over basically on your account after all the expenses have been paid. If you have a higher loan amount, it's not going to be applicable higher loan amount in second mortgage transaction, but in general, if we're like speaking about the approach, if you have a 4 million loan amount, you don't have to have multiple millions left over. You have to have only 1 million on your bank account to qualify for this. Again, great product to commingle, because a lot of times there are cases when the borrower really doesn't have anyone to add to the mortgage. So this is something that is worth ask the borrower if that's something that they can provide as an option to save the file, save the loan, and get borrowers still feel comfortable that they are alone on the loan, because there are different cases. Up to 80% and on the primary, 75% for second home and investment. So it's basically like a P&L qualification in terms of that. And now we're getting to the programs that are for our employed people. So we have 1099 only and WVOE only. So 1099, we are requiring the one recent year of 1099s. Has to be with the same employer for the past year. We are validating 1099 with a wage and income tax transcript. So this is something important to understand how it works. We will expense your 1099 with a 10% expense ratio. I know that there are lenders who are expensing it with 25%, so 10% is a very nice number for the expense ratio. If you have a seasonal employee, that's also an option. So if you have a 1099G, it's going to be okay to proceed as long as you are within the guidelines. And if you have a borrower who used to be a W-2 and he switched or she switched to 1099 within the same company within the last year, that is fine. We don't need a 1099 provided in that case, as long as they are within the same company. So if you have an employee that for whatever reason felt the benefit of changing to 1099 within the same employer, that is fine. We will be able to qualify them. 1099 goes with 85% LTV for the primary and 75 for second home and investment. And WVOE will be the next product. WVOE is the great product for your borrowers who are like making tips, for example, the servers, the nail technicians, something that on the pay stubs you will not see that number, but they are actually making that money. So that's the great product for those people. This is basically a Fannie Mae 1005 form. The HR or the manager of the person is filling out this form, and we are considering the loan in case the LTV is again the same approach as with P&L. If the LTV is 70% or lower, we are going with a standalone WVOE. If the LTV is 70 to 80%, then we need the 2 months bank statement to support the transaction, to support the WVOE with at least 75% ratio. Okay. Same approach, really, as I mentioned you, that if something is not supporting, submit right away with the 70% LTV, don't risk that part. And the very important thing is for the WVOE, this is the only product that really like actually restricts is the family member being employed by family member. So please make sure when it's a WVOE transaction that you did check that they are not employed by the family member. Okay. This is like probably the best program that we are well known for. It's the DSCR. We've been doing it for so many years and got very, very comfortable with those. DSCR for the second lien, it must be higher than 1. So if normally you know A&D as the no DSCR limitations for DSCR products. That's the case for first mortgage only. For DSCR second mortgages, it's more strict. So higher than 1 DSCR has to be. DSCR calculation will be considering both mortgages. So it's not going to be only second mortgage transaction considered. We will look at the first and the second mortgage and whatever the housing expense is. So it all will be taken in consideration for the second mortgage. For the DSCR, we are allowing 2 type of rental incomes. It can be long-term and it can be short-term rental income. So when it's a long-term, predominantly we are just using 1007. If you have a lease agreement, if it's for example a refinance, if you have a lease agreement, we can use it as well as long as it's higher than the 1007 by at least 25%. So in that case, we are able to consider the lease agreement. Otherwise, like in my practice, most of the time 1007 is a good source to support the rental number. When it comes to the short-term rental, it's a little more complicated. So if it's a purchase transaction, if you are doing the piggyback loan for the purchase, in that case, we are just able to do the AirDNA. So you don't even need to like prove us that this property has been rented out short-term before with the previous owner. We just need an AirDNA that will support the occupancy rate. So we are requiring at least 60% occupancy rate, and we will do the ratio of 75%. So we will take the 75% of whatever AirDNA is showing. When it goes with the refinance transaction, if you're doing basically like traditional second mortgage when you are taking money out of the property, then in that case we need the actual short-term rental agreement, like something to prove that it has been rented short-term, or a 1007 with a short-term information with an actual rent for the short term. So those are going to be your options. Again, this is a great opportunity for you to bring the DSCR higher than 1, because a lot of times, especially like depending on the area where you're doing the mortgage, like we are located in South Florida, a lot of times here, if the LTV is high, it's very hard to get that DSCR higher than 1. So that's going to be your option to make file eligible with a short-term rent for the purchase transaction at least. Okay. DSCR with A&D, it's a little more non-traditional. So we are catering it not only to the experienced homeowners, as I mentioned before, we're also providing it to the first-time home buyers as well. So again, if you're doing like a cash out transaction, second lien, then obviously it's not going to be a first-time home buyer, so it's not going to be applicable there. But if you're doing a piggyback and you have a borrower who's living in a rental, living rent-free, or that's their first purchase, whatever is the case of the scenario, first-time home buyer is more than welcome. And it doesn't matter if it's a foreign national, if it's a citizen, all of those residencies are applicable for the first-time home buyer feature. Normally DSCR is capped with a 75% LTV. If you have a foreign national borrower, then the cap will be 70% LTV. Okay. And the last, I believe, it's the foreign nationals program. We are, again, based on where we are located, South Florida, we are very comfortable with foreign nationals. We've done plenty of those. Really easy to close loans. We can do them 2 ways. It's either DSCR or a full doc. Full doc doesn't mean always tax returns or equivalent. So we have on our website present the sample letters that will assist you with providing the letters from the employer, from the CPA, with exact information needed to qualify for the full doc loan. Or the easiest way is to go DSCR route. Both are available only for investment products. With the 70% CLTV for DSCR and 75% LTV for the full doc. So I would say the full doc option is greatest when you need that extra 5% of the LTV to qualify for the loan. Otherwise, I will always go with the DSCR option, to be honest, because it's just like so easy and the pricing is quite close. So just like a little opinion moment. Overseas assets are allowed, so you don't have to get your borrowers with foreign national visa to open the American bank to qualify for this mortgage. We can obtain the bank statement from the country where they're at with little limitations. For example, Venezuela, Russian, Ukrainian borrower, we are very welcome to originate loans for them as the residents from those countries, but we will not be able to use income or assets from those countries. So they would have already had to be transferred somewhere else, either to United States bank or maybe like French bank, doesn't matter, as long as they are not in those countries. Other than that, overseas assets are absolutely allowed. We will just use the today's currency exchange to exchange the numbers and put the dollar amount in the application. Your borrower will be able to send the money to the title company for the down payment closing costs. Reserves will just use whatever like the exchange rate is for that purpose. Even like monthly payment, when we are speaking about already closed loan, when they are making mortgage payments, they're still able to do the mortgage payments from foreign bank. The only thing that they will never be able to do the ACH payment. So it's kind of like it's going to be on them to track how they're making these payments. It's going to be like wire and it's going to be more complicated for them. But again, that's an option that they are not limited just to open the bank account in America. Okay, foreign nationals, it's always 12 months reserves. Doesn't matter if it's a first or second mortgage transaction, doesn't matter what property type, it's always going to be a little stricter. So 12 months reserves required. And again, Venezuela, Russia, Ukraine, it's a very great feature depending on your like borrower's network, because a lot of banks, a lot of lenders just disqualify those borrowers just because of where they are from. We are absolutely okay with the residency. The only thing, make sure that their assets and income, if income is being used, actually income for those residents most likely will have to go DSCR unless they happen to have an income derived from other countries. But yes, so those are going to be like great borrowers to bring to A&D for sure. Okay. Quick pricer. This is something that I highly encourage you guys using with A&D. This is a great tool that is available from anywhere. It can be on the website, it can be on the portal. So wherever you are like looking at the A&D page, from any source, there will be a quick pricer available and you will be able to pre-qualify your borrower with few steps. So it has the ability to price every single loan, including governmental loans, including conventional loans. You will specify every parameters that you are looking for. Every tab is very user-friendly, so you can either drag that line, you can type in the number, the FICO score, the LTV just by typing the number. You are specifying here every feature, if it's a first-time home buyer, if it's a short-term rent, what going to be the compensation. You can do the borrower paid or lender paid here. You're specifying the state. So if there are any state limitations, for example, for the prepayment penalty, it's gonna announce it to you so you will know what you're facing. If anything is ineligible, if we're speaking about parameters, it's going to become red. So you will know visually that you can go up to, I don't know, 700 LTV, 700 FICO score or something like that. And it also gives you opportunity to see not only like the pricing, but you also see the monthly payment. And depending on what is important to you, is it the dollar amount of monthly payment? Is it the rate? Is it the lender credit or discount points? You'll be able to navigate those numbers. Like you see the arrows there, you can bring them down or up and see how to make the file look good. You can share those numbers with your team. You can send those numbers to your processor, and that way they will know that that's what they have to submit the loan with. So this way, like you have everything documented. And it also gives you all the important underwriting notes, underwriting guidelines. So you know like what is going to be with your gift funds requirement, what is going to be with your ratio requirement if we're speaking about DSCR, like on this screenshot, how many months of reserves you need, and so far, so on. So great tool, makes you self-sufficient basically. You don't always need to like rely on someone to answer your questions. You could just go there and see in 2 minutes basically what your loan is about, what you can offer. And this is a live engine, so whatever it shows you now, this is reporting in our internal system as well. So it doesn't matter where you're pricing in Quick Pricer or you're going in our system AIM, it's going to be absolutely the same number, so you can rely on that. Okay, and the last one that I will be covering, then we will pass the word to Carlos, is our scenario submission. Also a great tool for you if you, for example, don't have time now to go to the Quick Pricer. You are on the road, you're in the field, you're meeting with your realtors. You don't have time right now, but you need the answer soon. You don't know how to structure the loan yet. You want the help, but you don't want to call your account executive yet. So this is the feature where you are sending your scenario. It has a brief form with some main parameters that within 30 minutes, your account executive will return your either call or email, depending how you can specify in notes like what is your preference there, and they will come up with a solution for you. So again, a nice tool for people, for busy people who don't want to like just, if you have some idea in your head and you don't want to engage yet into the deeper conversation, please definitely use this form and get our account executives working.
Awesome. Both solutions are really great, and scenario submission, Quick Pricer, we really encourage you to use it because it's super convenient. Okay, and thank you, Nadezhda, for such a comprehensive presentation on our second mortgages. Before we move forward to real life scenarios and pass the mic to Carlos, we wanted to remind you once again that you can drop your questions to Q&A box. Don't be shy. We're going to address them at the end of the presentation, and we'll be happy to help you here. So with that being said, Carlos, please let us know about the couple real life loan scenarios you've been dealing
Yeah,
with.
absolutely. My pleasure. Yeah, thanks for going all that detailed information. We got a lot of exciting products. These are just two examples of real scenarios that we have. We have these self-employed borrowers. This example would specifically be for a restaurant owner, and they're going through the bank statement loan. It's 12 months, primary property, and they want to do a cash out. So they own their restaurant. Their primary has appreciated in value since acquisition, which we always love, and they want to leverage that, right? They don't want to go through all the issues with refinancing the first mortgage because they have a very nice payment, and their first lien rate was 3.25. So all we did was have them do a second lien. They provide the 12-month bank statements. It all gets reviewed. We have a concierge team as well who will give you kind of a preliminary value, an idea of the income prior to submission, so you know where you stand first. But we were able to make this happen. They were able to keep that lower payment, their lower lien rate on the first mortgage at 3.25, and we were able to give them a little bit of money out of their home to go and improve their restaurants and do whatever they want with it. So it's a great opportunity to keep that lower payment and then still take money out of your home. Next slide, please. This one we actually see very often as well. So, especially for our DSCR product, we have a lot of very experienced investors. They have very large portfolios, a lot of REOs, and maybe they wouldn't necessarily qualify or they would have a difficult time qualifying if we were to get their personal returns and all of their different business returns and things like that, 8825s, et cetera. So this is an opportunity for them to do a multi-pack. We see it very often. This particular situation, they had 3 different loans and they submitted 3 DSCRs. Again, they wanted to not go through all that hassle and lose that rate on the first mortgage, but they did want to take out some equity in their home. So we were able to do this all simultaneously. We didn't need to chase down income documentation, PIDIA docs, anything like that. And we were able to go ahead and help them access the equity in these 3 homes, send them on their way without all the hassle of, getting dozens and dozens and dozens and pages of tax returns, which we all like. So
Okay, Carlos, thank you so much. So if you have any scenarios you'd like to address right now, you have this unique chance because we have both experts right now on the call who are ready to answer your questions in real time. So let's move forward to Q&A session and let's see what do we have here. Okay, so the first question is, if we are using asset utilization to offset the DTI, the residual balance that needs to be 1.1% is based on the second lien loan amount, not the combined loan amount. Is that correct?
That is correct. It is the subject loan amount, not the cumulative total.
Okay, perfect. And the next question is, what rate on the second position lien? I guess.
Yeah, it's more
Yeah.
probably for me question.
Mhm.
I mean, there's like, you know, that the rate is consistent from the scenario. You cannot just say what's going to be the rate. It will all depend on the product type, LTV, and all these good things. But it's always going to be like somewhere in between of, I would say, 8.75 and 11%, something like in that range, based on my practice, based on the loans that we have done. Like, for example, now I opened the quick pricer and the second lien, 24 months bank statement, primary purchase with like, let's go with a max 85% LTV with a 720 FICO score. It's 11%, 11.5.
I guess the next question goes to you, Nadezhda, as well. Minimum credit score for DSCR second lien.
I believe it was 620. Let me double check. Okay, sorry, my bad. It's 680 for everything. 680 gonna be the minimum FICO score.
And just the asterisk on that too is, of course, for our foreign nationals with no credit score, that is acceptable.
Yeah, no credit score. If you have a 660 credit score and you're saying that let's go with a no credit score, not working like that. So they have to have the credit report run and it has to show no FICO score reported. And by the way,
Okay,
for foreign nationals, you guys can use our services to run the credit report. So you don't have to run it yourself if you don't have the ability to. Just submit the file and we will run for the foreign national at the submission process.
great. Thank you so much. I don't think we have any other questions at the moment, but again, if something comes up to your mind, please feel free to submit your questions now or contact us later after this webinar. So just to be on time, let's move forward with the wrap up. If you didn't know, we have our conventional loans promo right now, which will be available till February 16th. So please use your time to submit your loans because we have this amazing price reduction. Okay, and we just wanted to let you know about the upcoming webinars. So we do our webinars, I would say, every week. You can all find them on our events page, but the next coming up is our new broker orientation. So if you just sign up with us or you're just thinking if you want to start working with us, that's a great chance to join this webinar just to get the general information about our programs and tax solutions and about our loyalty program. Please join. The next one will be our Advantage Loyalty Program workshop. It's a real workshop. Well, you'll be able to test and try everything during the call, and our experts will be able to answer all your questions about the loyalty program in general, how to collect the points, how to redeem them, etc. And In the middle of the March, we're going to have a spring housing forecast with Rick Sharga, who is a well-known, renowned industry expert. So please join us for those upcoming webinars. And if you are not still yet partnering with us for some reason, please do so by scanning this QR code on your screen. You can become our partner by filling up the broker package. So we really encourage you to do so. And as I mentioned at the very beginning of the webinar, you're gonna receive the copy of this presentation. So you'll have those useful links handy. And with that, let me double check if we have any other questions. No, just thank you guys for amazing content and great job. And someone says that is looking forward to working with us. I mean, yeah. But we have a comment here as well. Thank you for running foreign credit check. Always welcome. Okay. Again, thank you so much for your time. We hope this presentation was educational, useful. Please reach out to us and your account executives if you have any other questions, not only on second mortgages, but on our programs. And we'll be happy to serve you. Have a good one, everyone. Bye.
Thank you, everyone.